Hello, hello. Good morning, everyone. Oh, I have to sneeze. Apologies. I wish I could have done that sooner. But morning, everyone. Hope everyone's doing well. Welcome to Friday, July 14th. It is OPEX Friday. OPEX Friday means that we have options expiring today, right? Futures are not expiring today, just options, meaning that there could be more volatility, more subdued movement. And typically, in terms of seasonality, we're coming to a slight end of this upward trend where we could spot some kind of reversal maybe today, maybe next week. Thanks, Colin. But I'm not trying to call tops on this bull market. We've been bullish for a while. We've been talking about the longs. If we start rejecting and order flow tells us that there's some sell side, we'll hop on it. But I'll talk about levels. I'll talk about key areas of inflection that can arise and have that start of a pullback. But the bull is starting to get dragged on a little too long based on seasonality. And typically, what we have is somewhat of a minor pullback. So let's talk about what we got. OPEX today. I highly suggest lowering trade size if you're going to trade. A lot of options traders maybe just don't trade at all because volatility is going to kind of just kill options. With futures, I'll maybe look for 1-2 trades, trade small, right? Do a very, very slow trading day for myself. That's what I'm planning on realistically. But the main thing that I do want to talk about is earnings. The bank earnings are kicking off Q2 today, right? We had JP Morgan, Citigroup, Wells Fargo. And with that, what we've seen, let me just open a chart here, but what I saw last I looked at it was a gap up in these overall financial names, right? A lot of financial names did struggle, especially regional banks, which again, I was talking about some longs on it looking pretty good. But banking, right? A lot of people are talking about the banking crisis, this and that. But realistically, we saw a rebound. Everything looks fairly smooth. They did a stress test. Everything looked fairly smooth. And today we had those bank earnings that came out. So let's take a little deeper dive into those bank earnings and see what's going on here. If this would want to load, maybe I should have done this beforehand. So for the most part, analyst earnings revisions don't paint too much of a pretty picture. However, based on what I've seen so far, the gap a different story to tell. It's always when like I'm trying to load something that it just decides to bug out. Like when I need something, it's like, you know what, I'm not going to work today. So only one of the big six banks in the US saw its Q1 earnings consensus estimate rise over the past 6 months. And analysts have cut their Q2 earnings estimates for Goldman Sachs, which is expected to post its worst quarterly earnings in years, and Morgan Stanley. So, rate repercussions, part of the reason for lower expectations for bank earnings is that deposit costs are continuing to rise as the Federal Reserve interest rate hiking path continues, albeit at a slower pace now. But Jeffries Ken Ustin expects deposit mix shifts and elevated competition to weigh on funding costs, while reserves for bad credit will likely increase. Expect Q2 to be similar to Q1 with deposit beats and non-interest bearing deposit outflows driving stock performance. That's what Morgan Stanley analyst Betsy Grasek said. Let me just try and open this up here. There's also a credit focus, realistically. The one bright spot is credit, excluding subprime consumers. It's a double edged sword because the good news is credit is good, but the bad news is this could mean rates can go even higher, which will likely put some pressure on deposit betas and non interest bearing outflows. So, brother, if this could load, that'd be great. In terms of, I'm trying to find these, I'm trying to find this data, but let's see. In terms of some of these earnings, start with Citi here. The revenue 18.48 versus, or sorry, 19.48 versus 19.3 billion expected, so beat in revenue. Earnings 1.33 versus 1.32, so a beat in that as well. We also had that. Let's see here, JP Morgan, Adjusted revenue 42.4 billion versus 39.34 billion. Earnings per share 4.75 versus 3.83. So beats on all fronts here for the past two. Wells Fargo also beats on revenue and earnings per share. And we have a few things here, right? The belief that the Federal Reserve is finally succeeding its battle against inflation has helped practically everything this week, from emerging markets to international bonds and the S&P. Although trade was a little sluggish on Friday due to the beginning of the second quarter reporting, investors ending the week with huge profits across all assets. So the largest increase since November has occurred in the last 5 days for the MSCI Global Stock Index. Bond prices increased as well over the past week, with 2-year rates, which is most susceptible to changes in the short-term policy, falling as much as 30 basis points. Additionally, the U.S. earnings season has begun today. JP Morgan, Wells Fargo, Citi, blah, blah, blah. So JP Morgan is up here pre-market. Let's see how much it's up. It's up about 2.5%. Other banks as well are doing fairly well, gapped up on all fronts. Even Goldman Sachs, which is expected to do poorly, has gapped up as well. So in other news, right, we'll talk about our trade plans and ideas based on this earnings, but theoretically earnings for tech does come out next week, right? Starting next week, I should say. And I'm expecting some pretty good earnings in tech as well, which could put some more upside pressure in this market. If we start to see poor earnings results in tech, that could be that capitulative period where we do start somewhat of a downtrend. But I can see still tech earnings following suit with these bank earnings. A lot of analyst expectations were poor, but you can see beats, gaps up across the board. And I do think that tech can have something of the sort. Yesterday, XRP, so a lot of these crypto fanatics finally are rejoicing with an over 70% surge, as Judge cryptocurrency isn't a security in terms of sales and to the general public. However, it denied Rippy Labs' motion for summary judgment regarding international sales, and will issue a separate order for that trial date in due course. So after the ruling, Coinbase relisted XRP. The token saw its market cap swell 64% over the last day, triggering a broader rally in the crypto market, with Bitcoin up 3%. And in 2020, the Securities and Exchange Commission sued Ripple for allegedly raising more than $1.3 billion through an unregistered digital asset securities offering. So again, I'm not too far in crypto, but yesterday that was news all across the board. I'm mainly interested in the earnings and how these equities are going to shape up in the coming weeks. But when we talk about trade plans today, talking about trade plans on the S&P. Yesterday, I had marked the level 45.55 as the week's target. We barely missed it, right? I think we came about 1.75 points shy of that area. I think that marks a local top. If not, 45.64. I don't really want to be short these areas unless I see some kind of confluence on order flow. But I think those two areas you want to really watch as local tops for the day. The bulls, they're going to want to defend the 45, 32, 33 area. Yesterday was a huge region where we saw multiple stuck longs and eventually the burst through that area, which rallied us 20 points to the close. I think if we start selling under 45.25, that's when the transition point happens. And that's something that I'll look into maybe today, maybe next week. But today, volatility comes in, OPEX, right? There's a lot of muted expectations for market trending at this point, right? We're at a key area. A lot of people are thinking this thing's overbought. A lot of people are opening shorts. A lot of people are still getting short squeezed. So it's one of those days where you want to really take it slow, take a step back, reduce the contract size. And if you've never traded these events, these OPEX volatile days, maybe just call it a day realistically. I was thinking about it. We'll see what happens. Maybe I have 0 trades today, but I really need something to stick out, and we'll go from there. With that, we're going to open up the trading room, right? We're going to open up the trading room for our futures traders. You can go check out the free futures course that is on our website, and we'll do this again on Monday. We'll do this again next week. And I hope everyone has an amazing weekend. Stay safe out there. Keep in mind, we got OPEX. I don't know how many times I'm going to repeat it, but let's look forward to earnings next week, and let's keep it smaller today. So let's open up that trading room, and I'll see you guys in there. Thank you so much, and have a great weekend.